Alright, I gotta find this one. Let me see if I can sit and read my article. I guess I can sit it there. What's up, man? Shit. Man, kids and shit all over the place. Yeah. All right, so your boy is here. Yo, 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 yo. I'll give y'all a few minutes to roll in, and then I'll start reading the article for y'all. You remember today is election day or voting day. So, for example, you have stuff like this if you're in Connecticut and New Haven. That'll be posted everywhere. So you make sure that you get out there and you vote, and not for the party line. I don't care if they're Democrat or Republican or independent or otherwise. What's going on, Lashes? You want to vote for the people who are going to put laws into place that benefit you. For example, the article that I'm about to read. So give it a few more minutes and then I'll get started. Give it a few more minutes and I'll get started. In fact, while we're getting ready for me to get started, I'm going to take y'all on a walk with me around my neighborhood until we get back to my destination. Let me change my camera settings. Camera. Change the camera. Back facing camera. Boom. So now I can let y'all see what I see as I'm walking while I walk around the block here in the downtown New Haven area. So you see a lot of nice businesses and stuff. It's a nice, quaint area to live in. Little expensive restaurants and fancy cars. And then haters who come and scratch your fancy car like they did mine. They scratched my Benz with their key. I don't know who did it, but such is life. Then you got stuff like this, like wine and tapas, right? They got a $400 bottle of wine, which is not that expensive. It's a 2015, right? So, we walk around, we see election stuff, again, apartments. But also, again, remember I told you guys I'm here by Yale. But this article has a lot to do with these politicians. So give it about another minute, and then I'll get started for us. Ladies and gentlemen, if you're enjoying that content, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, and I'm here today to weapon tap on your head with another ADH wealth solution. Before I go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. So, as we proceed to give you what you need, okay, this is actually a new store they just made too in my neighborhood. This is where they have all kinds of Jordans and stuff. So, I'm not really going to go in there right now because I don't feel like dealing with the salespeople. But if you can see in there, they got all kinds of stuff in there. Game show, what's going on? I'm about to get started in like another minute. I just wanted to give folks time to catch me in the algorithm and all that. So, ladies and gentlemen, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall. And I'm back today to weapon tap on your head with another ADH wealth solution. Make sure you hit that like, drop a comment, subscribe, hit that notification bell, and as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. Now, with that being said, I'm going to turn off the camera and I am going to not be reading the chat while I read this article. I'll try and jump back and forth, but for the most part, I just want to read this article to you guys. So, today's article is from Yahoo Finance, and this was published November 6th, 2023 by Danny Romero. And it reads as follows. Goldman Sachs expects home prices and mortgage rates to come in higher than originally forecast. So again, things like today being a day where you're going and voting, the reason that it's important you don't vote down party lines, but you vote down whatever the fuck the candidate is running for that applies most closely with what you want to happen. So you don't get situations where things like mortgage rates increase and you can't control it. So let's read this article. Goldman Sachs is once again changing its expectations on home prices and mortgage rates. In both cases, the firm's analysts are revising their forecasts higher for the year, with the recent reacceleration in home prices taking them by surprise. Roger Ashworth, managing director at Goldman Sachs, wrote in a note for the firm's housing team. Give me 1 second, guys. You gonna be over here with the music? You over here with the? I'm gonna go over there and I'm reading the article. All right. So sorry, y'all. I'm outside, so you do have to respect the fact that you're outside and you know make those concessions. Hold on 1 second, though, y'all. Let me see if I can pause. Well, I'll get back to it. Let me just move to another section so that I'm not right underneath the music. Give me 1 second, y'all. I'll move to a quieter spot. Roger Ashworth, managing director at Goldman Sachs, wrote in a note for the firm's housing team. The team now expects home prices to appreciate 2% on a seasonally adjusted basis for the year, up from its earlier hmm? up from its earlier adjusted basis for the year, up from its earlier forecast of a 1.8% gain. As for mortgage rates, the analysts expect the rate on the 30-year mortgage to end at 7.6% in 2023, up from 7.1% previously. So, ladies and gentlemen, this means that for every $100 you borrow from the bank for a house, you have to pay them basically $8 back. So if you borrow $100, you have to return to them $108. So you're putting yourself behind the eight ball very heavily in that sense. Now, let's continue. Let me just check the comments really quick, see what y'all saying here. Broke Genius, what's going on, bro? Salute, salute, salute. Chill it, chill it. So make sure, y'all, that you hit that share. Let me continue with the article. So an unfriendly byproduct of our forecast for resilient home prices and limited rates relief is enduring poor housing affordability, Ashworth wrote. Home price surprise. Goldman's previous forecast accounted for expectations that the Case-Shiller Home Price Index would drop 1.3% in the last 5 months of the year. That didn't happen. Home prices grew over 0.9% in August, month over month, marking a new all-time high for the index. While we acknowledge that the Case-Shiller Index incorporates significant time lags, a particularly important feature of this print since mortgage rates only breached 7% towards the end of August. The continued strength of the data surprised us, Ashworth wrote. He particularly noted the outperformance of the unaffordable coastal markets. For instance, San Diego, California saw a 1.7% price gain, while home prices in Seattle settled in higher at 1.5%. Ladies and gentlemen, I'll also put the article in the chat. Give me 1 second. I just realized I don't have it in there. All right. Let me put the article in the chat so y'all can always read along with it. And where was I? Here we go. So, August's home price increase shows that even with mortgage rates hitting 23-year highs, demand is outpacing supply, even as it becomes more expensive to purchase a home. That's largely because there are not that many houses on the market, as homeowners cling to their low-financed homes and don't want or can't afford to move. Now, ladies and gentlemen, before we continue further, realize this. Even though this is shock value and this is scary, yes, because interest rates are going up to 7 and 8%, don't forget Back in the late 70s, early 80s, even though I was just being born then, mortgage rates were in the double digits. They were at 10%. Remind you, mortgages only used to be 50% lump sum down. So there's a lot that happens with that. So anyway, the inventory of available single family homes is about 1 million compared to a 2015 level around 2 million, according to the National Association of Realtors and Goldman Sachs research. The lack of homes for sale has pushed home prices up 5.8% year to date, well above the median full year increase across the more than 3 decades of Case-Shiller data. With that in mind, Goldman Sachs is forecasting that home prices will rise 1.9% in 2024, while in 2025, the firm expects prices to end up 2.8% for the full year. Regionally, the features could look different. We continue to expect the path for home prices to be highly varied at the metro level, particularly favoring cheaper cities with inventory constraints, i.e., older MSAs in the Midwest and Mid-Atlantic. Despite the recent strength in expensive coastal metros, Ashworth wrote. Ladies and gentlemen, if you're enjoying my content, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description. Give me 1 second. Give me 1 second. Rates volatility remains stubbornly high. As for mortgage rates, Goldman noted 2 key dynamics playing out in the rates market. The yield curve, a graphical representation of the relationship between interest rates of bonds with different maturities, continues to steepen, Ashworth wrote. Second, rates volatility remains stubbornly high, he added, which makes it more expensive for mortgage lenders to fund loans. The secondary market that purchases security backed by mortgages has begun to price a higher for longer mortgage rate environment, he said. As a result, mortgage demand should stay tepid. Reflecting the persistence of rates, we forecast total mortgage origination to remain sluggish at $1.5 trillion for the full year of 2024, similar to our full year projection of 2023 before raising slightly to $1.8 trillion for full year of 2025, Ashworth wrote. The team is also expecting mortgage rates to end at 2024 at 7.1% up from 6.8% previously and close out 2025 at 6.6%. While we think that refinance volume should increase slightly next year as more borrowers try to lower their debt service expense on recently produced mortgages, our economists' lower home sale forecasts should pressure purchase origination, the housing team added. So that's it for today, folks. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. With that being said, ladies and gentlemen, wipe ass, work in progress every day and see success. Wipe ass, work in progress every day and see success. Wipe ass, work in progress every day and see success. And remember, folks, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.